Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Well, hi there and welcome to the ISE FX Options Weekly Outlook for December 1st to the 7th. I'm your host, Jason Ayres, founder and president of OptionSource.net, and as always, we're going to start with a look at our weekly U.S. dollar index. This is a great way to gain some perspective as to how the U.S. dollar is trading against a basket of currencies. And after a sharp decline earlier on in the week, the U.S. dollar managed to rally strong to close back within that 86 to 88 focal zone that has been on our radar for quite some time now. Our daily snapshot more clearly reflects that 84 to 85 area as being a key level of support, and that strong bounce suggests that the U.S. dollar still has some momentum to the upside. Now, a look back at our weekly chart suggests that although the U.S. dollar did close slightly lower on the week, it did manage to hold its ground against most of the majors. And at this point, it appears that we are consolidating between those two key focal zones, the 86 to the 88 and the 84 to the 85. Now, as long as the index maintains its position above this 84 to 85, and more importantly, remains in this 86 to 88 focal zone, then the window continues to be open for a play into that 90 to 92 box, which represents the next level of resistance for any sort of continued strengthening in our U.S. dollar. Let's take a look at our first ISE FX options pair value, the CDD, the US dollar versus the Canadian. We suggested that a test of the 130 level would likely lead to a little backfilling as that area remains a strong resistance. We recognize that the 123 to 125 was a logical area of support, and although the pair value cut through that zone to test that 119 to 121 range, a quick bounce has landed the pair value back into that key area at the 123 to 125. Now, although Friday's close does not look promising to the U.S. dollar bulls, the 123 to 125 area does represent a natural retracement, suggesting that support here could yield a third test of that 130 to 132 resistance level. A move lower brings that 119 to 121 focal zone back into play with a pivotal support down between the 114 to 116. Next up, the YUK, the US versus the Japanese yen. Well, we're seeing an all too familiar pattern forming here in the shape of a sideways triangle, which often reflects indecision with respect to a directional bias. However, in the case of the YUK, it has resulted in a continuation of the prior trend, which has, as of late, been to the downside. Now, that being said, we find some support in here at the 95 to 96, and if that support is able to hold, the window is open for a test up into the 98 to 99 focal zone identified here. To the downside, we do have a very near-term target in at the 93.5 to the 94. A break below that would see us test that not so long ago bottom in at the 91.5 to the 92.5. Okay, let's take a look at the EUI, the US versus the Euro. Last week we identified what we suggested appeared to be a continuation pattern. However, we were extremely cautious for the potential of a rejection as we were trading into a very key resistance level. We did suggest that a rejection away from this level would likely find support down into that 77 to 78 focal zone, which is indeed what took place. Although we broke below that for a day, we managed to play back into that to close Friday above, and the window now is open for another retest of that 80 to 82 focal zone. If we're unable to maintain this level, a break below our 77 to 78 opens the window up for a test of the 75 to 76 focal area. The BPX, the US versus the British pound, traded off of its highs last week to close within our anticipated support level in here at the 65 to 66 focal zone. Now, if that area does not hold, the next level of support can be found right down here within that 61 to 62 area. It is important to note that that 65-66 range is a key retracement level, and any bounce off of this is sure to meet with some resistance once again back into the 68 to 69 box. Well, after a test of previous highs, the AUX, the US versus the Australian dollar, has retraced into that 150 to 152 focal zone. This too represents a key level of support, and a bounce off of this would see us targeting that 160 to 165 focal zone once again. If that 150 to 152 does not hold, then the path of least resistance will be towards a test of the 140 to 142 range. Okay, let's take a look at a few key points. First of all, our thesis continues to be bullish for the US dollar over the longer time frame. However, currently the CDD, the EUI, the AUX, and the BPX appear to show signs of testing their key support levels, suggesting the potential for further backfilling. Finally, the YUK is showing some signs of indecision this week. However, we are still cautious of an intermediate term trend reversal. Folks, this has been your ISE FX Options Weekly Outlook for December 1st to the 7th. I've been your host, Jason Ayres, founder and president of OptionsSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX Options trade alerts, just visit www.optionsource.net. To learn more about ISE FX Options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX Options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in US dollars and have a European-style exercise.